CLS Market Review for the week of August 12, 2013. I'm Matt Harwell. Markets struggled last week following a weaker than expected non-farm payroll report on August 2nd, and July payrolls added only 162,000 employees. This number was lower than anticipated and was accompanied by downward revisions to prior months. Hours in the work week fell along with wages. Employment is a key market indicator at the current time. Although the employment numbers were weaker than expected, the unemployment rate did drop 0.2%, mainly due to a decrease in the labor force participation rate. This increases the chances of Fed tapering sooner rather than later, as the Fed is using the unemployment rate as its gauge. We turn now to international investing, and for this we go to CLS Senior Portfolio Manager J.J. Schenkelberg. J.J.
At CLS, we have had an evolution within our benchmark methodology. Prior to 2009, we guided our clients toward the S&P 500 U.S.-based index. As the investment world has become smaller, U.S. investors have become accustomed to including international and smaller cap securities in their base portfolio. In 2009, we introduced the Equity Baseline Portfolio, or EBP, to the CLS Methodology White Paper. The EBP currently includes 80% Russell 3000 Index and 20% MSCI ACWI, All Country World Index, ex-US. The CLS benchmark represents a custom combination of U.S. and international investments. The investment committee has chosen to allocate 20% of the benchmark to international investments based on the global investment universe and an assessment of how much international exposure U.S. clients may be comfortable with in their portfolio. U.S. clients have historically held a home country bias. Based on CNBC daily reporting of large-cap U.S.-centric indices such as S&P 500, NASDAQ, and Dow Jones Industrial Average, rather than indices that include international investments, it would seem this bias remains in the retail space. However, the investable universe is much larger than what is represented by the S&P 500, NASDAQ, and Dow Jones Industrial Average. MSCI has created the ACWI IMI Index, which represents an all-country world index, investable market index. This index represents all liquid, investable assets in the world. A full description of the index, as described on the MSCI fact sheet, is available in this week's PDF and podcast. This index is representative of the entire investable universe worldwide, including domestic and emerging markets. How much international is in this index, you might ask? Almost 51% of the index is represented by countries outside of the U.S. That's quite a bit more than we currently represent in the EBP. It seems many of our clients are concerned about current performance as measured against the S&P 500. International exposure, which has primarily been benchmark-like so far this year, has acted as a drag on overall performance. We have published many articles talking about the strong growth opportunities in international markets and their attractive valuations. International deserves a strong place in any diversified investment portfolio. It is important to note that CLS exposure to international, while acting as a drag on performance this year, has actually been much lower than the investable universe would dictate. When the entire investable universe is considered, what many in the institutional investment world consider the appropriate investment benchmark, performance has been much lower than the S&P 500 as well as our EBP benchmark. Maybe someday CNBC will catch up with the evolution and start showing benchmarks that also include international investments. Time will tell. At CLS, we remain comfortable with the EBP benchmark, but are keenly aware of all global investment opportunities and believe our clients want us to seek opportunities in all areas of the investable market.
Thank you, JJ. In this week's PDF and podcast, we will further explore the ACWI IMI Index and share insight from a recent visit from the MSCI. That concludes our update for the second week of August. I'm MGH on behalf of myself, JJ, and every other acronym in this week's podcast and market review. Have a great week. We'll see you next Tuesday. TTYL.